Hi, my name is Allie Martin. I'm Vice President of Operations here at Gershman Mortgage, and I'm here today to talk to you about ARM loans, or possibly launch my career as an influencer. So an ARM loan, ARM stands for Adjustable Rate Mortgage, and this is going to be in contrast to your typical fixed rate mortgage, usually 15 or 30 years, that is just like the name, that rate is fixed for the life of the loan. The rate doesn't go up, your principal and interest payment doesn't go up, no surprises, boring in the absolute best possible way. An ARM loan is going to work sort of in the opposite way. You're going to start out with a really nice low interest rate that is fixed for a certain amount of time. But then after a certain period, for the rest of the life of that loan, it's going to adjust either up or down, but I mean, let's be honest, it's probably going to be up. And that's fine as long as you are informed and understand what that max rate could be. So I think that in the finance industry, sometimes we tend to make things sound a little bit scarier or more confusing than they really are. ARM loans do have several number factors that are associated with them, and I'll go through those with you, but really the only one that you need to make sure that you're informed about and concentrate on is that max cap. That's going to determine the absolute highest that interest rate can ever go, and therefore the highest payment that you could ever potentially have. Whenever you are budgeting for your housing payment, you always want to absolutely budget for the worst case scenario, not that lower interest rate that you're going to enjoy at that first part of the loan. Okay, let's break down those numbers. I've got my handy dandy beautiful little notepad here so you guys can have a good visualization. So your neighbor Karen says she's got a 3-1 ARM and you're like, you got a 3% interest rate? What? I know her credit is not as good as mine. No, here's what that 3-1 ARM means. Now, it could be a 3-1, a 5-1, a 7-1, a 10-1. There's lots of variations, but the logic behind the math should be the same. So what this first number means, and it's really important, that is how long your interest rate is going to be fixed for, 3 years. Again, you could choose a 5-1, a 7-1, even a 1-1 ARM, but for this example, we're going to use a 3. So we have a 3-1 ARM, and Karen has a 5% interest rate. Her rate is going to stay fixed, just like any other normal fixed rate loan, for 3 years. Okay, great. What happens after that? Well, that's where your 1 comes in. That tells you how often that interest rate is going to change for the rest of the life of the loan, the rest of the 30-year period. So in the case of a 1, which is very common, it's going to change once a year, every year. Your rate will go either up or down, although, again, let's face it, it's probably unfortunately going to go up, and every year after that. So 3 years fixed, adjust every year after that, 5%. Now, and this is where the numbers can get confusing, but they're really there for your protection. We're going to talk about the caps. So again, these numbers could vary, but the logic is the same. One that I'm seeing a lot right now is 2, 2, 5. This first 2, that's how much after the 3-year fixed period, your rate can go up or down by 2%. That's the max. So your 5% rate can go up potentially in that 4th year up as high as 7%. Now, second 2, that tells you for every other adjustment, every other year up until 30, again, your rate can go up or down an additional 2%. So your rate could go from that 7 up to 9 and so on. But, and this is the big daddy, and this is the one that I want you to make sure that you're really informed about, this 5 represents your max cap. This is going to help you do the math to figure out what the absolute highest interest rate and therefore mortgage payment can be for you. So if you look at these and add these together, your rate can never go up or down more than 5% over the whole life of the loan. So your absolute worst case scenario is going to be 10%. So you want to make sure when you're budgeting and you're thinking about what kind of loan you want, as you're talking to one of our fantastic loan officers here at Gershman Mortgage, you want to make sure that you find out what this 10%, what that payment would be. If you look at that payment and you're like, no way, Jose, Could never do that. Even if I could afford it, that's not how much I want to spend. I don't want to ever be anywhere near that. No problem. An ARM loan might not be the best option for you. Could those numbers go down? Could that interest rate go down and it potentially never get that high? Of course, and we certainly hope for that case. But a lot of folks thought that that was going to be the case back in 2008, and unfortunately we know how that turned out. So it is always, always best to budget for worst case, hope for best case, but make sure that you are comfortable with this number before ever considering an ARM loan. So you might be asking yourself, who is a great candidate for this ARM loan, this adjustable rate mortgage? Well, definitely, if you think that there is a high chance that you will not be in your house long-term, or this loan long-term, then an ARM rate might be a really great option for you. So for instance, if you're in the military and you know in the next couple of years that you're gonna be selling your house, going to a new post, there you're gonna buy a new house, or maybe you live in military housing, that might be a great option for you to take advantage of that nice low starter interest rate. We have some fantastic VA ARM loan options for our veterans. Or you may be, maybe you're crushing it at work and you know you're gonna get this promotion and a big raise very soon, and you're gonna upgrade your house and go somewhere bigger, go to a different neighborhood. Again, an ARM loan might be great for you. Conversely, maybe your kids are finally ready to go off to college, you're going to downsize, you don't need to be in that fancy school district anymore. So again, you might want to look at an ARM loan. So that's ARM loans in a nutshell. They're not evil, they're not a scam, they're a fantastic product for certain borrowers. Give our loan officers here at Gershman a call today and they can help walk you through ARM loans and the many other fantastic suite of products that we offer. Thank you so much for watching, and we'll see you next time.